Welcome to the XFO Intelligence podcast channel, Complex Q Series. Today, we explore one of the most pressing challenges for institutional investors in the evolving global financial landscape. Before we dive in, a quick reminder to like, share, and subscribe to our channel, and send your feedback to xfointelligence@gmail.com. Let's start with the key question. How should long-duration institutional investors stress test allocation strategies against a world where capital flows align with security alliances rather than traditional risk-return efficiency? For decades, institutional investors have built portfolios around the single elegant principle that capital flows to the highest risk-adjusted return. Geographic diversification, factor exposure, and correlation matrices form the bedrock of fiduciary decision-making. But that paradigm is structurally breaking down. We are entering a regime where capital allocation is increasingly governed by security architectures, treaty alignments, and permissioned financial infrastructure. In this world, yield optimization is secondary to access certainty. The critical question is no longer how to price volatility. It is how to stress test portfolios in a reality where capital moves along alliance lines rather than traditional efficiency frontiers. Let's break down the new reality. The assumption of frictionless global capital mobility was a historical anomaly. Today, we have foreign investment screening, outbound investment controls, dual-use technology restrictions, and fragmented payment networks. Capital responds to permission, not just to price signals. When security alliances dictate capital account openness, settlement routing, and collateral eligibility, traditional risk models fail. Correlation matrices break down, liquidity evaporates rapidly, and stranded asset risk emerges from regulatory architecture, not market cycles. The core liability obligations for pensions, insurers, and endowments remain fixed, while capital flows become constrained. So how should stress testing evolve? Traditional stress testing injects macroeconomic shocks into static correlation models. But in an alliance-aligned capital regime, stress testing must shift from statistical tails to structural thresholds. There are four key pillars here. First, Access-Centric Constraints. Model capital flows as binary permissions, not continuous variables. A jurisdiction's yield doesn't matter if access depends on alliance alignment or export control rules. Second, Topological Liquidity Mapping. Liquidity depends on connectivity across multiple jurisdictions. Stress tests must measure how capital pathways collapse when payment rails fragment. Third, Liability Matching under constraint. Stress testing must verify whether obligations can be met when payment systems diverge or foreign exchange convertibility breaks down. Fourth, asymmetric recovery and path dependency. Fragmentation is easier to trigger than to reverse, and recovery takes longer than expected. Stress test outcomes must inform portfolio design. Diversification now means dispersing across different permission architectures, not just geographies. Direct investments must embed alliance compliance triggers and exit pathways. Sovereign credit must align with settlement currencies, and traditional hedges must evolve to block-indexed instruments. Finally, fiduciary duty and governance must adapt. Boards must shift oversight from performance versus benchmark to liability resilience under network fragmentation. Risk committees need to track network connectivity indices and access-adjusted liability coverage. This is not about politics. It is about structural market friction management. In sum, the era of capital allocation driven solely by risk-return efficiency is over. Security architecture is now the backbone of the financial infrastructure. The investors who thrive will be those who recognize that access is the ultimate currency and resilience is the highest return. Thank you for listening to this episode of the Complex Q series on the XFO Intelligence podcast. Don't forget to like, share, and subscribe, and send your feedback to xfointelligence@gmail.com. We'll see you next time.